All right, so have you ever thought about this?
About what?
Like, if you could only buy and hold one stock,
Oh,
just one, what would it be?
that's a tough one.
It really makes you think about what matters for the long term, right?
Definitely, for sure.
So this deep dive is inspired by this Motley Fool article.
Okay.
And it's called, If I Could Only Buy and Hold a Single Stock, This Would Be It. Pretty
Yep.
catchy title, right?
Yeah, very direct.
It was written by Keith Spites and published November 15th, 2024.
Gotcha.
And full disclosure, he's a Motley Fool contributor and owns shares of the company he's recommending.
Okay, so he's got some skin in the game.
Yeah, but let's see if his reasoning makes sense, you know?
For sure, yeah.
So the article starts with these two key criteria for a long-haul pick.
Okay, I'm listening.
A strong moat and multiple paths to growth.
Makes sense.
So, okay, I have to ask you, when you hear economic moat, do you think like medieval castles and drawbridges?
I do, actually. That's the first thing that pops into my head.
Yeah, me too. But in the business world,
Yeah, it's different.
it's about having a sustainable competitive advantage.
Right, it's what protects a company's profits.
Keeps those rivals away.
Exactly. And there are different types of moats, too.
Oh, really? Like what?
Well, like network effects.
Okay.
Like we see with all these social media platforms these days.
And they're everywhere.
That's a powerful example.
Uh-huh.
But there's also brand recognition.
Yeah.
You know,
Yeah.
think like Apple or Nike,
Okay.
where people will spend more just for the logo.
Just for the brand.
Exactly. And of course, we can't forget proprietary technology,
That's a big one.
like Tesla and their EV patents.
Oh, yeah. They've got a head start for sure.
Uh-huh.
So it's like a company's secret weapon, right?
You could say that.
Something that makes it really hard for competitors to, you know,
Steal their customers.
exactly steal their lunch.
Yeah.
So the article's pick, no surprise here, is Amazon.
No surprise there.
As of the article's date, they have a market cap of $2,224 billion.
Wow, that's huge.
It is, and I gotta confess, my life is pretty much Amazon-ified at this point.
What do you mean?
Well, you know, Prime Kindle, Prime Video, the list goes on.
Yeah, I get it.
I feel like I'm constantly clicking buy now.
I think we all are.
So do you think they have a real moat, though?
Or are they just good at convenience?
Yeah. Is that enough?
Well, convenience itself can be part of a moat.
Okay. Interesting.
But with Amazon, there's multiple things going on.
Like what?
That network effect we talked about is definitely a factor.
Okay. How so?
Well, think about how Amazon Prime creates this cycle
Mm-hmm.
where more members attract more sellers
Right.
and more sellers attract more members.
Okay.
It just keeps growing.
It's hard to break into that.
Yeah, for sure.
It's like that snowball effect.
Yeah, rolling downhill, gathering more and more snow.
I like that analogy.
It's a good one.
So the article also mentions their cost advantage mode,
Okay.
how their focus on regional fulfillment and automation helps keep prices low.
Right, because they can get stuff to people quickly and cheaply.
Exactly. And it all ties back to that famous Jeff Bezos quote,
Which one?
"Your margin is my opportunity."
Ah, yes, classic Bezos.
And they're always squeezing costs, right?
Yeah, which lets them offer competitive prices while still making a profit.
And that low-cost structure is a barrier for competitors.
Absolutely. It's not just about being big. It's about being big, Amy, efficient.
Got it. So I'm starting to see how these moats work together.
Yeah, they all reinforce each other.
But let's move on to that second key criteria for a buy and hold stock.
Multiple paths to growth.
Right, or as the article calls it, optionality.
I like that term.
And Amazon's journey is the perfect example.
In what way?
Well, they started as an online bookstore,
Right.
then became this massive e-commerce giant,
Mm-hmm.
and now they're a leader in cloud computing with AWS.
It's like they're always reinventing themselves.
They're not afraid to branch out.
Exactly.
So what do you think about this, dear listener?
Yeah, what about you?
What other potential growth areas could you imagine for Amazon?
Good question.
They've already dipped their toes into healthcare grocery delivery.
Even space exploration with Blue Origin.
I know. It's crazy to think about where they'll go next.
Yeah, what's next for them? Who knows?
So before we get carried away dreaming about Amazon's future, we have to address the elephant in the room.
What's that?
Their valuation? Even the author says it's pretty lofty.
So is it too high?
Well, he argues that traditional valuation metrics
Okay.
might not fully capture Amazon's potential.
So it's more than just numbers.
Right. It's about their future prospects.
That's interesting.
So what do you think, does a high valuation automatically mean a bad investment?
Or could it be a sign of exceptional growth potential?
It's a question worth pondering.
Definitely.
But here's the thing. The word holdee in the article's title is really important.
How so?
The author is arguing for long-term ownership.
Not a quick trade.
Exactly. And if you look at Amazon's stock history,
Yeah.
those who bought and held, even through ups and downs, they've generally done pretty well.
So it's about patience.
Yeah. Are you a trader trying to time the market?
Or an investor looking to own a piece of a company's future.
That's the question.
Big difference.
And what does that say about the mindset you need for long-term success?
Something to think about.
Food for thought as we move on.
I like it. It really comes down to your investing style, doesn't it?
Are you in it for the long haul or?
Looking for a quick buck.
Exactly. So let's bring this back to our listeners.
Okay.
We've talked about Amazon, but now I want to ask you, what would your single buy and hold stock be?
Ooh, that's a good one.
And more importantly, why?
Yeah, what criteria would make you bet your whole portfolio on one company?
That's a tough question, right?
It is. It really gets to the heart of investing.
It does. So let's say you're starting from scratch.
Okay.
How would you approach this challenge?
Well, for me, it all starts with the business model.
Okay, what do you mean by that?
Well, what problems is the company solving? How do they make money? Is their revenue stream sustainable?
So it's about going beyond the hype.
Exactly. Looking under the hood.
Not just the shiny marketing.
Right. You got to understand how the engine works.
I like that analogy.
So once I have a grasp of the business model, then I look at the competition.
Okay.
Who are their rivals? What advantages do they have? Are those advantages durable?
So we're back to those economic moats.
Exactly. But this time, we're not just identifying them.
Right.
We're assessing their strength, how long they'll last.
Because a company could have a strong brand now, but what if?
What if things change? Tastes change. Technology disrupts the industry.
It happens all the time.
Think about Blockbuster Video.
Oh, yeah. They seemed invincible.
But they didn't adapt.
And streaming took over.
It's a reminder that past performance doesn't guarantee future success.
So true. So in addition to strong financials and a durable moat,
You also need to look for innovation.
okay, what does that look like?
Well, are they investing in research and development?
Okay.
Are they exploring new markets, expanding their product lines?
So they're not just sitting still.
Exactly. They're actively looking for ways to grow.
It's not just about being the best today.
It's about being even better tomorrow.
And that brings us back to optionality.
Those multiple paths to growth.
Could you give an example?
Sure, let's look at Alphabet.
Google's parent company.
Right, their core business is search and advertising. But they've also invested heavily in AI,
Artificial intelligence.
cloud computing, autonomous vehicles.
So those are their bets on the future.
Exactly. They might not be huge money majors now.
But they could be down the road.
That's the idea.
So they're diversifying their growth potential.
Precisely hedging their bets.
It's like building a portfolio of possibilities.
Exactly.
But let's not forget about the people running the show.
The management team?
They can make or break a company.
Absolutely.
Right.
Especially for a long-term investment.
So what do you look for in a management team?
Well, a clear vision for the future.
Okay.
A track record of good decisions. And a culture that fosters innovation and accountability.
So they need to be competent and ethical.
Yeah, you're trusting them with your money.
It's like you're investing in the people as much as the company.
That's a good way to put it.
So how do you actually evaluate a management team?
Well, look for transparency in their communication.
Okay.
Are they willing to admit mistakes and learn from them?
So humility is important.
Yeah, and a genuine commitment to creating value for shareholders.
Not just short-term profits.
Right. It's about the long game.
Okay, so we've talked about business models, moats, management teams,
What else is there?
company culture.
Ah, yes, the secret sauce.
What makes a good company culture?
Well, collaboration, innovation,
Okay.
a sense of shared purpose.
Sounds kind of touchy-feely.
Maybe, but it's important.
How so?
A strong culture attracts and retains top talent.
Okay, that makes sense.
It creates a positive work environment.
And that leads to better products and services.
Exactly. It's all connected.
But how do you assess company culture as an investor?
It's not always easy from the outside,
Right, you can't just walk in and observe.
but there are clues you can look for.
Like what?
Well, employee reviews on sites like Glassdoor.
Okay, but those can be biased.
So take them with a grain of salt.
What else?
Look at employee turnover rates,
Okay.
how they treat their customers, how they handle PR challenges.
So it's about piecing together a mosaic.
Exactly. Looking for patterns and consistencies.
that reveal the company's true character.
Right, because a strong culture is often a sign of a well-managed, sustainable business.
Which is what we want for a long-term investment.
Exactly.
But remember, no company is perfect.
There will always be challenges.
The key is to look for companies that are learning, adapting, improving.
So it's not about finding a company without flaws.
But a company that acknowledges its flaws and works to overcome them.
Exactly.
So back to our original question.
If you could only buy and hold one stock,
What would it be?
we've covered a lot of ground.
Moats, optionality management teams, company culture.
It's a lot to consider.
But now it's your turn, dear listener.
Put all the pieces together.
Imagine you have only one slot in your portfolio.
Which company gets that spot?
What makes you confident in that choice?
What makes this company stand out from the crowd?
Don't just give us a name. Tell us the why.
What's the story behind your choice?
Why do you believe this company will thrive for years to come?
Take some time to reflect on what you've learned.
Look beyond the hype.
Trust
Trust your instincts.
This is your portfolio, your future.
your legacy. So yeah, it's a big decision, right?
Huge, picking just one company.
But even if it's just a thought experiment,
It tells you a lot about how you think about investing.
for sure, like what's important to you.
Exactly. And even if you didn't pick Amazon,
Yeah.
you can still learn from them.
Oh, absolutely.
Like their focus on the customer,
Uh-huh.
always innovating
And not afraid to disrupt themselves.
before someone else does.
Right. Always staying ahead of the curve.
That's key.
And the article talks about how well long-term Amazon investors have done.
Yeah. They've been rewarded for their patience.
It shows the power of compounding.
That snowball effect.
Just let it roll.
And it gets bigger and bigger.
But you need patience.
That's the key ingredient.
It's so easy to get caught up in the day-to-day.
The ups and downs.
You gotta zoom out, focus on the long term,
Block out the noise.
and stick to your plan.
It's like a captain navigating a ship.
Through a storm.
You have to stay focused on your destination
Trust your compass.
and your crew.
Even when things get rough.
Speaking of rough,
Yeah?
even the best companies
Yeah.
face challenges.
No investment is risk-free.
Exactly. Even Amazon has had its ups and downs.
So how do you tell the difference?
Between a temporary setback and a real problem.
That's where research comes in.
But due diligence.
You can't just buy and forget about it.
Right. You got to stay informed.
Keep up with the company, the industry, the whole market.
Pay attention to their financials.
Their competition.
Any big news that could affect them.
It's like tending a garden.
You plant the seeds, nurture them, protect them.
But you also have to adapt.
As things change,
Sometimes you gotta prune things back.
to let the healthy parts grow.
So as we wrap up today,
Yeah.
I want you to remember that the journey of choosing a stock is just as important as the destination.
It makes you think about your goals,
Your risk tolerance.
what you're really looking for.
And even if your pick doesn't always outperform,
If it has those key qualities,
strong moat, multiple growth paths,
good leadership, positive culture,
you can feel good about your choice.
knowing you've made a smart decision.
So keep exploring
Stay curious, keep learning.
and never stop looking for those exceptional companies
The ones that can change the world.
and grow your wealth along the way.
That's what it's all about.
Happy investing, everyone.